Hi there, and welcome to this week's edition of Macro Minutes, Friday, the 11th of June. I'm your head of trading, Mark Gardner. We'll start with the disclosure statement. The information which is summarised in this webinar does not constitute financial advice or other professional advice. It's general in nature and doesn't take into account your specific circumstances and should not be acted upon without a full understanding of your current situation, future goals, and objectives. Okay, stocks in our universe. We have Magellan, CIP, and RZI. Now, Magellan reported their funds under management May update on the 7th. Overall, it was a poor update. Total fund outflow at 0.4 due to decreasing retail, down 1.19%, and institutional fund down 0.17. Although the decline was marginally offset by infrastructure equities with a 0.88 growth in Australian equities, growing 3.78%. MFG fell just about 1% on the day. Look, this is one that, in my personal opinion, we've seen the ASX release the patterns on their retail client behaviour over the last couple of months. The ETF market really is eating into these guys' business models realistically, and being able to do a low cost ETF for 0.4 management fee when these guys are charging a lot more, it probably doesn't bode well. They did launch some form of annuities, a very complicated annuities product recently, which they then had to come out and explain to the market the following day. Which would take on Challenger a little bit, I suppose, which might be good coming up with the rising interest rates. So at least the management are sort of doing something about this. So yeah, look, the jury's still out, but I wouldn't expect those. Personally, wouldn't expect those fund outflows to really stop too much. Next up, we've got CIP, which is the Centuria Industrial Fund. So CNI, its parent company's one of the trading department recommendations as well. So Investing's released CIP as a rec on the 27th of last month. The price was around about $3.55. It's currently around about $3.68 as of the 9th. I think it rallied a little bit yesterday as well. I think it's somewhere in the 70s now. Its parent company is coming into the ASX 200, CNI. This is their industrial fund, obviously. We like industrial a little bit better here at Maqro at the moment. Obviously, with the concerns around shopping centres and your traditional retail and office stuff still being affected by COVID and possibly not returning to levels of the pre-pandemic. So it's a pure industrial REIT, exposure to booming industrial property due to the change in consumer behaviour and the acceleration of online shopping, digitisation. It's expected change companies with the logistics, distribution centres and operations. Basically, there's a lot of it provides stable tenancy, and they occupying pandemic-induced vacant spaces with distribution and data centres, among others. On the 7th of the 6th, it was included in the FTSE Russell EPRA NA REIT Global Developed Index, effective from the 21st. The index tracks listed REITs' performance based on liquidity, size, and revenue. Thus, ETFs that currently mimic the above-mentioned index will need to buy them. Same sort of things happening, obviously, as I said before, with CNI going into the index. Essentially, all those index funds end up having to purchase a little bit of that, a little bit of these companies, so they can keep their variance right. So that's usually always fairly decent news for these sorts of stocks entering the index. Next up, we've got RZI, Raise Investments. It reported its May growth update on the 8th of the 6th. FUM increased 3.2 month on month, slower than the March-April month on month of 6.24, though it still remains on track for the 1 billion milestone by the end of this calendar year. It requires a compounded monthly growth rate to reach its target of 3.6% versus the 3.8 previously targeted. So obviously they're getting there a little bit quicker. Both super FUM, 4.69%, and retail FUM, 3.11%. Growth decelerated, although the customer metrics are tracking well. Active customer growth decelerated from all fronts, ex-Indonesia, where it almost doubled to 4.2%. However, the deceleration expected in Malaysia and Indonesia due to lockdowns and Ramadan. So, despite this, customer sign-ups grew in both nations, signalling strong demand. Significant increase in investment accounts across all global, Australia, Malaysia, Indonesia, and look at. It was trading around about $1.30 leading into these numbers. It tends to rally after these numbers, usually because they do report and then drift off over the rest of the month. I think we've covered this in previous podcasts. It's a trading department recommendation also, as well as a small cap recommendation. We added to the position in trading at $1.30, which we got out of yesterday at $1.60. I think it settled at $1.65. And look, we had a recent high of around about 190. I dare say, usually rallies for about 3 to 4 days after the numbers come out and then drifts off for the rest of the month. That trade, we have rotated around a few times for trading. We've bought in and then we've sold 190s and then gotten back in at 150 and 120 and 128, and then we've rolled it back out again. So obviously, yeah, the benefit there of playing the range for those of you who are a touch more active has been very fruitful. So, but overall, the company's definitely going in the right direction. Their CEO was on Ausbiz TV the other day and got quite a bit of coverage. And he was very bullish on the company's growth. Rightio, stocks to watch out for. We got Hit IQ, GFN, CSM. So a couple of these are IPOs, I do believe. But HIQ is it's basically like a mouthguard technology, essentially. This is one that I've had my guys go through quite a few of the IPOs. This was one of particular interest, as well as say Campify as well. But last month HitIQ filled an IPO prospectus to raise 7 to 10 million by listing on the ASX. The company is issuing 35 million shares at an offer price of 20 cents on the 16th of June. I do believe that date may have been changed to the 28th of June, but these IPOs can move around in dates. So the company sells these smart mouth guards. So it has sensors that collects data from a player's mouth and relay information to medical staff and training and medical staff. It's signaled a partnership with the AFL recently, which should see the mouth guards used by players this season. I think John Eales is on the board of this company as well. They're looking to get into the NFL particularly in the US. And it's obviously a massive issue, this concussion in sport thing. So from a legal standpoint, anything that professional sporting teams can do to take care and duty of their players will be very, very much welcome after the couple of $1 billion settlement the NFL had with their previous players due to those long-term concussion injuries. Now, the prospectus indicates the money to be raised will be to go towards R&D, which includes clinical trials to support the new Nexus A9 mouthguard. It also funds sales and marketing costs due to the company's offshore expansion and working capital, which includes admin and rent, etc. Rightio, next up we've got GFN. GFN International is seeking to raise 25 million through the issue of 25 million shares at a price of $20 over dollar on the 17th of June. Now, ahead of the IPO, the company raised 6.5 through convertible notes in 2 pre-IPO rounds. The company is a software as a service platform that helps financial services and real estate companies digitise their agent networks. Australian life insurers such as TAL use their services to communicate with smaller local insurance brokers that are selling their products in an automated way. Primary objective of the offer is to use the capital to meet admission requirements of the ASX as well as meet the funding requirements related to sales and working capital. This is because of the Israeli business has plans to list on the ASX due to its APAC-orientated target market. The investment's expected to continue to provide investors with exposure to the burgeoning Australian tech sector, which could potentially see a recovery in a market where investors are increasingly finding it hard to identify value. Moving on to Cosmo Gold, they're looking to raise $6 million. There is an absolute raft of gold and small mining stock IPOs going on at the moment. I think we looked at it, there was 37 upcoming floats, of which it must have been at least 3/4 were all mining. The newly listed company operates mining tenants located in Western Australia and has been recently given the green light to enter the Cosmo Newbury Aboriginal Reserve. Equity raise aims to fund exploration and potential development of the Cosmo Newbury project and increase the company's available working capital. RM Corporate Finance has been appointed to act as lead manager to the offer and underwrite the minimum subscription. The investment will provide investors with exposure to gold through a junior miner. However, small cap miners come with capital intensive business models involved in exploration and development, which could see stock values shift drastically. Not really my cup of tea, these gold and mining explorers. I don't think they traditionally don't have a great track record if you look at all of them. Obviously, you'll get your occasional one that you make an extraordinary money out of, but on average, I think very few of these things make money long term unless they sell off their royalties or sell to a bigger company. But we were looking at the trading department was definitely looking at that Hit IQ and Campify, which, as I said, were slated to list on about the 18th, but they could potentially move back to the 28th. They're both ones that we will probably try to buy market and open from the active traders point of viewpoint. We're very likely to leave the gold ones alone at this stage. Right, now looking ahead, what to expect next week. We've got monthly retail sales numbers in the US, Tuesday 10:30. Now remember everyone as well, Monday is a public holiday in New South Wales, Queen's birthday, long weekend, the ASX will be shut. So you'll have exposure over, two trading evenings, so Friday night and the Monday night in the US. Luckily, there's not much on the radar, economic data-wise, on the Monday. But with that Tuesday night, we got those retail sales. The big focus, I dare say, will be the Fed on Thursday at 4 a.m. This is always accompanied by the economic projections and statement. Press conference after as well with the Q&A. Look, we're basically at this stage, the view, or my view, is that we've had inflation numbers last night. They came out better than expected in the States. It is mainly in transitory inputs like used car rentals because of the chip shortage, used cars and car rentals and holidays and things that are causing about 0.3 of the 0.7 increase in CPI. The Fed's going to want to see at least a couple of numbers in a row, or a couple of months in a row. The labour shortage over there at the moment is 9 million job openings and 8 million unemployed. So, but due to there not being childcare opening yet, and just due to the geographical nature of there's a bit of an unintended labour shortage over there at the moment, which is going to be pushing wages higher. But I would say, the view of the trading department is essentially we would likely see the market grind higher over the next month until we get the CPI numbers and the Fed again next month in July. Just due to the fact that they're going to want to see a string of higher numbers before we start to see interest rates change. So look, while this one will be paid attention to, I would say that most of the central banks are waiting until at least July to make any sort of major decisions on tapering their QE programs. I think the EU's Lagarde last night said that they would not be touching tapering until at least March next year. Obviously, that can change. Next Thursday as well, we do have Philly Fed manufacturing. They'll be looking at the prices paid sections of these and seeing if the manufacturers, input costs are still rising as well, but the activity it's fairly closely followed. It's one that the Fed follows as well. Manufacturing reacts pretty quickly to market conditions. So you probably look out for that one maybe next Thursday as well. So that wraps up the macro minutes for this week. Thanks for listening, and we will speak again next week.